Commonly missed deductions for small business owners and freelancers around this time of year are things like mileage, business miles that are driven. You need to be tracking them throughout the year. I really like the app MileIQ. A lot of our clients use it. If you haven't tracked and you're like, do I just lose out on those? Go back through and rebuild your calendar from the last year, starting with anything that you were driving a lot for. Obviously, like start with the furthest distance and work your way down. So if you run out of energy, time, etc., you've gotten the most bang for your buck there. You don't want to be just estimating your mileage, because if you are audited, you're going to need to show proof to substantiate the mileage deduction that you're taking. One of the other things that you can claim is a home office deduction. That home office deduction, if you are renting, you can take a portion of your rent. It needs to be for an area that is used exclusively for business. So if you have a second bedroom, if you have a closet area, if you have a table that's a 10 by 6 foot area that you're using exclusively for business, take that square footage, take the total square footage of your living area, and whatever that percent is, let's say it's 10%, you can take that and you can do the home office deduction. So you can take a portion of your utilities, you can take a portion of your rent, you can take a portion of your renter's insurance, and you can take that as a small business deduction. A few of the other things that pop up are internet or phone. Same thing. You don't want to take 100% unless you have 100% dedicated phone for business. Anything that you share for business and personal, like internet, you don't want to be taking 100% of. So take the amount that you would feel comfortable substantiating should you be audited. And then things like contractor payments, software expenses, training and education, licensing fees, income taxes. If you pay income taxes and you're a sole proprietor, maybe you paid your estimated taxes this year. We'll do a separate video about that, but maybe you did. Those are not business expenses for 99.9% of you, because and they aren't at all for individual income taxes. So if you paid estimated individual income taxes, or when you pay your taxes that are due for whatever year, those are not a business expense. If you pay them from your business account, it's just, if you were taking money out of the business, it's an owner's draw, not a business expense. Things that are a business expense are if you owe franchise taxes, like if you're an LLC or an S Corp or an LLC in Illinois, California, like that $800 fee in California they always talk about, that is a business tax expense. Your individual estimated income taxes to the IRS and to California in that example would not be. So if you have other questions, make sure to pop them in the comments. I'm Caitlin Magnuson. I run a full service accounting firm for creatives, and I'm looking forward to chatting with you.